publishers of Mecardo, as I've said. Robert has over 30 years' experience of agricultural knowledge and working, and included in that is 11 years as a senior wool specialist with Elders, advising in the marketing and risk management of agricultural commodities. From experience, he has his finger firmly on the pulse of the wool market, and this webinar is the second that he has presented for Leading Sheep on the outlook for the wool market. Mecardo, for those who don't know, provides the latest analysis, commentary and indicators for wool, livestock and grain markets. Personally, I subscribe to the newsletter and have found it to be a good investment. So without further ado, I'd like to introduce Robert Herman. And Robert, can you take over, please?
Thanks very much, Noel. Good afternoon, everybody, and special good morning to our WA friends. And I know it's taken a little bit of working out with all the variable time zones we have. I'm based in Ballarat, and it's almost like we're in the Northern Hemisphere now, because today it's 7 degrees and we're only a matter of weeks away from Christmas. But people who have been to Ballarat before would probably say they're not surprised about that weather report. In my presentation today, I just want to acknowledge the assistance that we received from Australian Wool International, AWEX, from ICS, Andrew Woods, his Independent Commodity Services, and Palmina Analysis, which is Chris Wilcox, who all contribute to our analysis. So we're grateful to them. Just moving along. I've just got to make this slide turn. There we go. The things I'll be covering today, relating to the factors that we think are going to affect the wool market in the next 3 to 12 months. We're going to look at price and supply, see what sort of signals we're getting there. We're going to look at demand, not downstream demand, but more the export demand that we're reporting on in Australia. We want to have a look at fine wool premiums, and I know there's of special interest to a lot of people in the industry now, especially with the way the clip's getting finer. And we're also going to talk about what are Riemann wool forward contracts, or the wool forwards, telling us about the market, and how do they work. And we'll finish off by just letting you know a little bit about Mecardo and how it can provide this information that we're talking about today can be provided ongoing. In terms of looking at the market, I'm going to do it in a sequence, and you'll pick that up as we go. But one of the key things we look at is, or a major driver of it, is the economic indicators, because, you know, despite what's happening in Australia, unless our customers are in a position or a mood to want to purchase and buy, then you know, we're going to be affected negatively. And one of the indicators that we've used traditionally, and which has been shown to be quite correlated, is the economic growth in major developed countries. So when that economic growth is showing positive, it's indicating that we're going to see some positive demand for wool. It does. These indicators don't tell us how much the market's going to move, but they tell us more the direction that we can expect the market to move. So in the past, for finer wool, it's generally been the German and Japanese OECD leading indicators that we've found are giving us leading direction on wool prices. And you can see from the chart that's on the screen there that there is a correlation between when they turn up, the wool market turns up; when they turn down, the wool market turns down. We've now seen in recent months that's divested, so the indicators are turning up and the wool market was still turning down, although in recent days, as you can see by that chart, we've seen it come up a little bit. So we think that's an important factor to be considering. Remembering they just provide a lead for the price direction. They don't tell us by how much, but they do provide a lead for that direction. And importantly, we've seen in the past that it's been the German and Japan indicators that have been leading indicators. That may change in the future, but I think it's still at this stage important to understand what they're doing. So the take-home message there is that the leading indicators are currently rising for economic activity in the world and economic confidence as key markets, and that's certainly a positive for wool. One other thing we look at is what's happening with other commodities. So what's happening with other industrial materials that are used. It's really telling us how much industrial activity is out there and how much pent-up demand there is for raw materials to turn into more manufactured goods. And we've watched this over the years, and we've seen the 19 micron indicator and that index have had reasonably strong correlations. When that index is going up, wool travels up. When that index is coming down, wool comes down. You can see certainly in recent times it's been quite a strong correlation. Currently though, you can see on the right hand side of that graph the 19 micron index is heading south, whereas the manufacturing index, the IMF manufacturing index, has remained very solid, and that's a strong indicator to us that the effect of the drought and more fine wool coming onto the market is what's dampening down the fine wool price. It's not underlying demand. So we'll look a little bit more about what exporters are doing down the track a little bit. But the IMF index indicates that wool prices in recent months have been at levels in line with other industrial commodities, somewhere near fair value, and now they've got room to move up. One of the other factors in all this, and I forgot to mention this at the beginning of this slide, was that the correlation or that chart you're seeing there generally accounts for about 3/4 of the long-term 19 mpg movements. So while it's not an exact science, once again, it's something that can tell us which direction the market's likely to go or where the pressures are coming from. So that's a bit of positive news behind us. One item that's become quite topical in recent times is cotton, and more specifically what China is doing about their cotton stocks. So the background to cotton is that since about 2005, China's production ramped up to around 30 million bales and has stabilised at that level. However, in the last 4 or 5 years, they've been very aggressive buyers of cotton, and they've built stocks to a quite significant factor. And so at the moment, there's a stocks-to-use ratio of 160%. Now, what a stocks-to-use ratio means is that they've got 160% of the amount of cotton that they'll use in 1 year. And I saw a report the other day saying that based on their production, 30 million bales of cotton, plus these stocks, it would take 7 years for them to run out of cotton on their current usage. Now, that's had it hasn't been the first time they've had high stocks-to-use ratio, but they've, as you can see with that graph, they've then sold those stocks down. The effect on the cotton market in the last couple of years has been quite dramatic. It's meant that the cotton prices have been very high. It also means that once China stops buying, the cotton market's going to be under some sort of pressure. And if that large buyer of recent times starts to become a net seller, then that's not good for the outlook for cotton prices either. So China's announced that it's going to sell down its stocks, and that's a pretty open-ended statement. We don't know by how much. My feeling is that any trader who was going to sell down stocks would be wanting to do that in an orderly manner, because the last thing you want to do is see the market collapse and then you're left with a whole lot of dear stocks that you're holding. But even the fact that China now becomes a net seller of cotton into the market next couple of years rather than the major buyer is going to be a problem for cotton. So while it should be orderly, and we don't really know to what extent, it's not a good news story for cotton. And if we just take that a little bit further to the next slide, one of the reasons that's important is because even though that looks like a spaghetti bowl, that chart on the left, the wool price and the cotton price are pretty well in lockstep. So medium merino wool on its 5-year rank and cotton on its 5-year rank there, you can see that once one gets out of whack, the other one moves back into line with it. And at the moment, if you look back to, I'll just put my cursor over it there, but if you look back to 2000 to 2003, cotton was very cheap relative to wool, and then of course cotton rallied up. And then as wool came down, cotton came back down, or one led the other. I mean, it's always difficult to tell which. But they certainly work in unison. Today, we're over here on the right-hand side, you can see that cotton is now operating at 30% rolling 5-year price rank. So what that says is that since in the last 5 years, cotton has been more expensive than where it is now for 70% of the time, and it's been cheaper than where it is now for only 30% of the time. Conversely, medium wool is running at its 70% rank, which means it's been only more expensive for 30% of the time, and it's been cheaper than where it is now for 70% of the time. So we'd be hoping that the fact of China wanting to reduce stocks doesn't play significantly on the cotton price, because if that's the case, then based on the history of those two indicators marching side by side, we'd see that wool would struggle to hold its differential for any period of time. The other thing on that table, you can see on the right-hand side there in Figure 1, we're looking at the 5-year percentile ranks of apparel fibres. So in terms of the world, medium wool's at the 70 percentile and cotton's at its 30 percentile across the world, and that just reinforces what we were saying in the graph on the left. But also significantly, I think, is that acrylic and polyester are at below 50 percentile in Asia. They're at strong levels in Europe, but you know, with the majority of our wool first destination being Asia, that's another negative factor. So while Europe has similar price synthetics, Asia's got cheap cotton and synthetic prices, and we need to weigh that up as to how much that's going to play out on this wool market now. Having a look at exports. Exports is a good story. Exports to major wool processing countries is rising. In recent months, we've seen them lift strongly. The table on the left is the calendar year to August, and we've heard so much about how important China is to the wool industry. That's certainly still the case, and they've certainly ramped up their imports in this last 12 months. And on the right-hand chart, you can see that is this season, so July to August, they're up as well. But we're seeing more demand coming from a more variety of countries, and there's no doubt that's going to be important going forward. It reduces our risk in terms of having a variety, a wider spread of buyers. Significantly, in recent times, even though they're coming off a very low base, countries like the Czech Republic, India and Italy have suddenly started to operate in the wool market at a much stronger fashion. Anecdotally, there's you know, some of this buying that's coming forward is based on concerns regarding medium wool supply and what's coming forward, and we'll talk a bit more about that in the next few minutes. But there's also some recent anecdotes coming out that people are taking opportunities to purchase some of this cheap fine wool. And we'll talk about where fine wool is at the moment and what we think might happen with it, but there are now people starting to look at the levels of fine wool and considering that that's not a bad thing to take some stock on. There's no real evidence to say that underlying orders for fine wool are increasing, but certainly the activity in the fine wool market is starting to show that it really does have a pulse, and it's not just sort of bubbling along on top of the medium wool prices. Moving on to sheep numbers, and this, I think, starts to go to the heart of some of the concerns about that exporters and processors have. The very modest recovery we've seen in the Australian flock over the last couple of years stalled this year, and it basically stalled on the back of the terribly dry conditions in Queensland and large tracts of New South Wales. The chart I've got there has got a number of messages in it. One is the line which is the declining Australian sheep flock, but the grey line is the percentage of offtake, so the percentage of sheep that are slaughtered out of the Australian flock each year. And when that percentage runs above 10%, or 10.5% to be more specific, then the flock is in decline. And you can see there are certain periods there where the offtake has been below 10.5%, the flock rises, most recently in 2010, 11 and 12. And we probably all understand the reason that after a long drought, people wanting to restock. But it's interesting, this year we've suddenly ramped it back up to 12%. Our offtake is 12%. I'll talk a little bit more about the effect on sheep and lamb markets in a minute. But the bottom line in this point is that the Australian flock is not going to increase. In fact, based on what we're seeing now, the flock will decrease by about 3% for next shearing. So there's a number of factors in there. We've got strong and growing demand for meat, and I'll talk a little bit more about that in a minute. You know, one of the interesting stories which people who follow our reports would notice is that you know, China has really come out of the blue and all of a sudden is interested in our red meats, whether it's beef or lamb or mutton, and it's really put a cat among the pigeons in terms of demand. So we're expecting that mutton in early 2014 will become quite scarce, and given the price levels we're seeing now, it means that they'll probably get more expensive, and of course that will encourage some more sales, or it will encourage people to think a little bit more about whether or not they're going to join their used to merinos or prime lambs. So the bottom line is that we won't see any increase in wool production next year. That's given the proviso that we don't happen to have a boom year in terms of seasonal conditions, but in terms of the effect of increased sheep numbers, that won't happen. And so the takeaway to that is that will be a supporting factor in both sheep meat sales and in wool prices. Just a little bit more on lamb and mutton price, because I think these are important factors in where the wool industry is heading. And I just make the point about the chart on the left, which is the Eastern States Trade Lamb Indicator, figure number, they're both figure 2, but the one up on the top left-hand corner. You can see that we've got 3 lines on there. The black line is the 5-year average, the Trade Lamb Indicator for the last 5 years. The green one was last year, and the red one is this year. And despite the fact that we've our lamb slaughter is running 3.5% ahead of last year, our prices are stronger than last year. And with the normal seasonal trend where prices rally after Christmas, we're likely to see some quite strong lamb prices in the new year. And based on ABARES' prediction of a $20 million lamb crop, then the slaughter numbers will have to fall by about 10 to 15% below last year for the first half of 2014. So it's going to mean we've got I think from that chart there we can see that though we've killed more lambs, we have strong demand, and that strong demand is not waning. So when the supply starts to drop away, we should see lamb prices increase. Now, that's great for lamb producers, but it also means that people making mating decisions for next year aren't going to be shying away from putting out, you know, more than their fair share to the prime lambs. Mutton, as we mentioned before, we've had a big turn-off of mutton, and yet the price is stronger than last year. It's below the 5-year average, but we're expecting that the scarce supply in the early half of next year, early half of 2014, will mean that mutton will get scarce, demand is strong, and it will mean that there won't be any less sheep sold on account of price. So it'll mean that there's a slower recovery of the flock, as at least the same number of sheep are going to be directed toward meat production, and there's still good incentive for people to sell sheep off if the season gets tough. Moving on to the wool clip production. Everybody's seen for quite some time how far production has fallen, and there's no doubt about that. But it's almost a tale of two stories. There's two stories to it. The overall production has definitely fallen, as you can see the chart on the left. The chart on the right at the top matches up 19 micron and finer wool plus the 21 micron wool, and you can see that it's the 21 micron wool that's followed down the fall in production of the clip, but the production of 19 and finer really hasn't gone anywhere. It's still up around that 800,000 bales, and as a percentage of the clip, you can see it's heading up towards 40%. So it almost explains in some degree why we have this very closely strung market between fine wool and medium wool. There's been times when that market's been really miles apart, but in recent times it's been those micron categories have been very close, and it's because the fall in medium wool has caused a shortfall in meeting the demand in that area, and that fine wool has been more than adequate. That's not changing. If you have a look at the November figures for AWTA down the bottom, we've still got falling volumes of, on the year-on-year change, we've still got falling volumes for everything basically 17 microns and stronger. The exception is the very fine end. I've made a note here, though, that the big rises we saw in 15 and 16 micron volumes during the spring certainly look to be abating. And if you have a look at the September quarter figures for 15 and 16 microns, they were up 50% year on year, whereas the November figures are only up 15 to 20% year on year. So that would indicate that we're starting to see an abatement of that really strong supply of fine wool. One little other blip down the other end, which you can see, is 24 to 26 micron, which is up year on year. Generally, that covers off the crossbred lambs section of the market. This year, there's been combing length crossbred wool that's, because of the season, has dropped into that category, so that's up a little bit. So we should see the rise in fine wool volumes continue to fall further in the new calendar year, and there's no doubt that there's some areas that are having, much better seasons. There's still some areas that are waiting for their, the season to improve. One thing to keep in mind, though, is that even though the supply of fresh fine wool into the market will moderate to some degree, there's a lot of stocks of fine wool still being held by growers. It would be an interesting exercise to have a look at what percentage of the wool being held in brokers' stores is actually finer than 19 microns, and I think it would be a huge percentage. So even before we can see much dramatic improvement in fine wool compared to medium wool, that stock's going to have to be chewed through a little bit as well. So the downward pressure on wool production continues. We're going to see, the volumes only just maintained due to the seasonal conditions, and fine wool will steadily start to abate as the season unfolds. Turning to wool markets, they continue to be volatile and a bit unpredictable. We sit here a lot of times and thinking that the market should be rallying stronger than what it is, and it doesn't always provide logical answers, I don't think. A couple of things that we need to be aware of. The high Aussie dollar has meant that our customers now, really fully appreciate any movements in the wool market, and that's why I put up in Figure 2, I put up the 17, 19, and 21 microns indicators in Melbourne in US cents a kilogram. And you can see for a long time those markets were quite flat. I mean, if you've got a reasonably flat market and the dollar's at 60 to 80 cents, you know, the movements aren't as dramatic. But in recent times, the movements in our customers' pocket have been fully reflected in the volatility we've had to put up with here. And I think that would go some way to explaining why, when we've got such tight supply, that you know, the market is at times wants to pull back. You know, there's no doubt that our customers have had to come to terms with a much stronger wool price than you know, than what they saw in the past. So high Aussie dollar and high customer prices, but tight supply. Figure 3 is something that Augusto put together for me this morning, and it's an interesting thing. We don't know whether it means much or not, but the rally we're seeing at the moment, and I think from memory, the rally from September last year to its peak was about a 22% rally. I didn't write these figures down, but there's something like that. And so far, the rally from September to now has been a 14% rally year on year. So I know we used to have clients and wool growers who'd say, oh, I always sell my wool in the autumn or early winter or whatever because the market's always good. It's not the case anymore, and it's a case of watching markets, following their patterns, and taking advantage when the opportunities are there. And last year, through the December, January, February period, we had a lot of wool growers who forward sold at that time, and it gave them good protection going through into what turned out to be a pretty tough middle of the year this year. We're now seeing what we would loosely call another rally. One of the good things about this rally is that it's coming off a little bit higher base than the one we saw last year. So if we see the same percentage movements, we might see it go a little bit higher. So we'll talk a bit more about grower hedging in a minute, but I think it's fair to say that volatility not only challenges growers, but it certainly challenges buyers and processors. And you know, I imagine they would be having some you know, interesting conversations with their customers at times, trying to develop strategy in this market. We always put up our decile tables. One of the reasons we do that is because we think from experience that when we put up a graph, if you're a buyer, you can see the low points in the graph. If you're a seller, you see the high points in the graph. And what a decile table tells you is just what the range of prices have been over a period of time. This particular one just looks at southern MPG, so MPG quotes out of Melbourne. It covers the period from 1996 to current. And I'll just give a brief explanation of a decile table. If you want to know any more, on our website there's an explanation there under the frequently asked questions, I think it is, in Mecardo. But if we look at the 19 micron indicator in Melbourne, since 1996, it's had a low point of 693, and it's at a high point of 1778. So that's the range it's traded at. 50% of the time, it has been below 1048, and therefore 50% of the time it's been above 1048. So all a decile tells you is today it's at the 87.5% decile, which means that 87% of the time since 1996 it's been lower, and 12.5% of the time it's been higher. Now, we don't make any big deal about whether it's from 1996 or 2006 or whatever. You can move that around to whatever you like. I think what deciles do, though, is they give people a perspective of where the market is relative to a period of time. You can see across the bottom, we've got the current MPGs as quoted out of Melbourne yesterday. That's just a factual figure that's quoted. What the decile tells us is that if you look at 20 microns since 1996, they've spent 93% of their time below where they are now, and about 6.5% of their time above. And it also goes to explain a little bit about the medium versus, we know medium wools are strong, prices are strong. We know fine wool prices are struggling, and I guess a percentile tells us that, that same story. Crossbreds and cardings, it's a really strong market as well, and you know, if we were going to see these prices for the next 20 years, you know, we would be setting new records and new percentile tables, but all we can do is use the historical numbers to come up with that sort of information. We also use it to help people make decisions about setting prices for forward sales. So if it's one thing to take a view on the market, and we think everybody should have a view on where the market's going. But if your view is that you know 21 microns in the next 4 months are going to get to 2,000 cents, well, you're really betting that they're going to set a new record since 1996. Now, you could well be right, but as a hedger, you would say, well, I probably need to take a little bit of cover on part of my clip just in case that doesn't happen, and hopefully it goes on and makes a higher price anyway. Fine wool premiums. It's been a sad story. We could 2000s, late 2000. I beg your pardon, early 2000. There were people coming back from overseas saying that, you know, unless you got fine, you weren't going to survive in the industry. The world wanted finer yarn, lighter weight fabric, softer, all that sort of stuff. The big move that really rocked us was, I guess, the global financial crisis, but also the drought, which just meant that as demand for wool fell, our fine wool production didn't fall. And so you saw coming into the drought periods, we had really low premiums. So I should explain, this chart here is not telling us exactly where 18 micron was. It's telling us where it was in relation to 21s. So at this point here, 18 micron is 600 cents dearer than the 21 indicator. And at this point here, 18 micron is 200 cents dearer than 21 indicator. So we've come off some really high levels, but we had a couple of attempts to sort of go back to our higher levels, and they were quite short-lived, especially in recent times. And now we're really struggling with premiums being at almost their lowest. Just to emphasise that fact, I've just put up a decile table here. The 18 to 21 micron premium has had a range since 2002 only on this table. Since 2002, it's ranged from a low of 50 cents premium to a high of 946 cents. So, you know, we can see that in this chart here. 50% of the time it's been above or below 258. Now at the moment we're at 86 cents, which is way down here. That's why we have some confidence that despite the supply and all the factors that are contributing to this, at some point in time the fine wool premium will be at a higher level than where it is now. Now the thing to remember is that that fine wool premium could come from either 18 microns rising, if 21 micron stays where it is. If 18 micron rose by 300 cents and 21 stayed where it is, then we'd have a premium of nearly 400 cents for 18 microns. But could also come from the 21 microns falling, and that would once again put this chart back into some areas of normality. So the fine wool market at the moment is fortunate that it has such a high medium wool price, because if it didn't have a high medium wool price and it was only worth 80 cents more than medium wools, then we'd be seeing some quite dismal prices. I know that's not any consolation to people who are in the fine wool market, but it also talks about some of the risks that are going forward, in that we could well see fine wool attract a bigger premium, but that would be sort of inconsequential if it was at the expense of medium wools falling. Just moving on to prem-shorn wools and short wools. It's been an interesting story there. We've seen over the last 10 years that the discounts for shorter wools, but compared to 80 to 90 millimetre wools has fallen. And the major reason for that is, in our estimation, is that we've seen an increase in the demand for those wools based on current demand for knitwear, and that's meant that the short wools have become, more sought after. So we've got strong demand for knitwear, means that discounts for premium wool have been shrinking. In fact, anything greater than 6 millimetres in length really extracts minimal discounts in the market at the moment. And if you look at the stronger wools, 19 to 21 microns, sort of 60 millimetres and above has been getting negligible discounts. So as you can see, the last year they were lower than 10-year median. This has been an ongoing trend. The question is whether or not it will continue. Well, I think the answer comes from whether or not the knitwear sector maintains that strong demand. If that's the case, then yes, it will continue at these lower levels. I think also we can relate the same sort of chart to the discount for low staple strength. They've become quite low, those discounts, and it seems to line up with the discounts that short wools receive match up with discounts that tender wool receives. So the answer to a question we had posted, are they a thing of the past? Well, we've always got to be very careful when the wool industry is saying anything's finished and done and dusted. But as long as knitwear seems to be the flavour of the month, then those shorter wools will be strongly sought after, and perhaps we'll see these discounts stay quite minimal. I still think, it'll be interesting to see what happens if we go into a recovery with low sheep numbers in a good season, and the staple strength improves. We may even see those discounts shrink further as the supply of that short wool becomes, a short and tender wool becomes more problematical. Moving on to the forward markets, just to give you a little bit of background, we talk about the Riemann forward market. It's available to all wool producers via their wool broker, and all of the major wool exporters are participating. So what it attempts to do is provide a transparent platform where buyers and sellers can trade wool on a forward market. So I just took a snapshot of the Riemann screen. Probably the time's down the bottom there, 11 o'clock this morning, and you can see that across the top there is 18.5 micron category, 19 micron category, 19.5 and 21. So they're the trade on the fine wool screen. There's a coarse wool screen as well. On the down the middle where the column says tenor, that's just the maturity dates for contracts going forward. So you can see the dates go all the way up to October of 2015. On the left-hand side, if we look just at the 21 micron platform here, is where the buyers are bidding. So buyers are bidding 1260, 1250 out to July of next year. And on the right-hand side, this is where growers line up to make their offers. So you can see there that we've got 1260 bid for February, and a grower's offering to sell at 1270. So, the market's quite been quite what would you say? It's volatile in that it doesn't trade at times, and then all of a sudden it trades quite dramatically. The fact of the other bit of information I've got on there is this table on the right-hand side is the trades that have traded for December, so this week, and you can see that they're just in month order. So we've had people trading January and all the way out to June. In fact, today after I put this slide up, there was a July contract traded at 1250. So they're the prices, they're the maturity dates. I suppose the question is, how do growers actually set a price? I can tell you from our experience, Every grower has a different way of doing it, and every grower has their own way of working out what price they want to set at. But we've found that what works the best is if the grower sits down with his broker, determines what sort of price they're looking for, and then places an order on the screen, because we've seen orders on the screen. Well, if we had said to somebody 3 months ago they were going to get $12.50 for next June, it would have seemed impossible. And yet, by having orders in there, people have got traded this week. So the buyers are bidding strongly when the auction market is strong. There's no doubt that the forward markets piggyback on the back of the auction market. When the auction market weakens, buyers are less interested in trying to get forward cover. I think one other point to make with this screen, you'll notice, is that the 21 microns are bidding $12.60, $12.50, and the 19 microns are bidding $12.80, $12.70. So there's only a 20-cent premium between the two, and the effect of that is that most of the activity where people are selling has been on the 21 micron end. And I guess that's working for the buyers because that's giving them protection and cover in the medium wool sector. It's working for the grower because he's getting cover against the wool market, and most of them have got finer clips than that, so therefore they're open to this basis improving somewhere down the track. Given that it's at a record lows, their strategy is probably pretty sound. One other thing, going back to our percentiles, for July next year, trading at $12.50 is somewhere above the 90 percentile level. So it's a hard case for to argue that somebody shouldn't be trading something at these levels, because since 1996, for 90% of the time, growers have been selling wool below these levels. As I said, the best way to activate an order or get a trade done is to place a GTC order, and the GTC order just stands for good till cancelled. So the order sits in there. It can act like an alarm clock. If you say, look, I want, in this case here, this grower for November says, if I can get 1,200 cents for November, I'm happy to sell 5,000 kilograms. So he doesn't have to watch the market anymore on a daily basis. He just knows that if that trade happens, then he's going to get a phone call from his broker telling him that it's been traded, and he can start to make other arrangements for the rest of his clip. Well, I've got a note here in bold print as well. This is just our experience, is the number of times we have people who said to us, if I can get $12.50, I'll sell next year. When it gets to $12.50, they say, well, if I can get 13, I might sell. And it's very easy to run ahead of the market and stay ahead of the market. The difficult thing is to make hedging decisions, and that's what we're looking at doing here. Now that pretty much sums up my presentation on the wool market. I've just got, I think I'll just press on with 2 slides I've got here just to explain briefly to those people who don't know about Mecardo what Mecardo is, and then we'll hand over to some questions. So Mecardo's just for the interest of people who probably aren't aware, Mecardo is it's a Spanish word spelt badly, but Mecardo in Spain means markets. If you Google Mecardo, you'll see that we've just changed the spelling slightly, but we had to do that. We just couldn't register the name otherwise. It was set up basically with the support of Meat and Livestock Australia, and then with AWEX and AWI coming on board to take the, our experience was that with the great amount of data and information out there, sometimes it's a bit like trying to take a drink from a fire hydrant. It all comes out, and you're just not too sure what's what. Now, we also know that growers are information hungry, but they're time poor, so they're not going to wade through, large documents. So Mecardo is a new independent market information service, and what it does is build on the information provided by MLA, AWEX, the future exchanges, and others. We also use this information to identify what is relevant and to analyse it and then communicate it simply. So rather than drinking from a fire hydrant, what we're trying to do is make it more like drinking from a straw and just getting exactly what you want. In addition to Ag Concepts analysts, we engage a number of market specialists, and in the wool area we engage Chris Wilcox and Andrew Woods, both well recognised, and that gives a great diversity, we think, in topics and approach. We also do commentary on all the markets, so grain, sheep, cattle, as well as the wool market, and this includes in-depth analysis on the issues of the moment. Now we know, or we think we know, that growers are looking for information that's targeted to their business, don't want to be bombarded with useless and time-wasting information. So what we try and do is provide concise, punchy analysis, and it gets to the point. And one of the things that our analysts are really strong on is at the end of each article there is a paragraph that says what does it mean, what's the take-home message, so you can quite easily see what they're trying to say and how that information might help in the business decision making. The other way we meet growers' needs is by asking them to tell us what information they're interested in, and we've had some really fantastic leads, if you like, to do research articles and get the information out that people are looking for. So we'll talk more about Mecardo, but if you would like any more information, give us a call, and there's also a question in your survey at the end of this if you'd like some more information. And so there's a free trial where you can trial it for a while and just see if it's what suits you. So summarising our webinar today, I think once again the market signals are mixed. If we were at lower levels, if we were around the below 1,000 cents, I think the market signals would be strongly pointing upwards. But because we're at a reasonably strong level of the wool market, the signals are mixed. We know we've got tight supply, and we know it's going to remain tight. There's no wool sitting around in the world that can suddenly come onto the market and take them to build the flock. So that's a positive. We're not going to see the market suddenly dampened down by a whole heap of volume turning up. The China cotton stocks is one that's emerged recently, and when we first started to hear about it, it seemed like deja vu to me that there was always something coming out of left field for agriculture, and here's one now that is not even our fibre, and it's not in our country, but it has the potential to have a knock-on effect on the wool industry. Also, we continue to struggle with the fact that our competing fibres are cheaper. It doesn't mean they're better, or doesn't mean they're in more demand, but it does give a reference point to people who are in the processing industry that there are cheaper options out there. Demand is growing, though. The economic activity is pointing in that direction, and the recent export data is showing that demand is good. Fine wool volume will normalise. It's going to take some time, though, because we have built up some fine wool stocks, and we've also, I don't think we fully realised how much we influenced the market, influenced the genetics when people went to fine wool back in at the start of 2000. But generally speaking, the market outlook is generally positive. With that, we would also be saying that that wool producers are punters. We think there should be some cover taken at these levels, with the hope and maybe even the expectation that the market will provide better prices down the track. But if that's the case, fantastic. But we wouldn't be overlooking making some forward sales right now. The question that always comes up is how much wool should we forward sell? Well, that's really has to be an individual decision. And we'll have some clients who will sell nothing, and in this market we'll have some clients who will sell a lot. And the final point from us is we thank you very much for taking the time to be part of this. And if you'd like to have this sort of information ongoing, it's available on Mecardo, and we'd be pleased to give you a complimentary trial for a period of time. So I'm not sure what happens now, but I think I hand back to Alex. Is that correct?
Yeah, right. Thanks for that, Robert. Very good presentation. We've got a few questions coming in from people. So I'll start going through a few. If there are still attendees who want to ask questions, please type them into the question box in your toolbar on the right-hand side of your screen, or you can, as Noel said, raise your electronic hand, which will show up next to your name, and I can unmute you, and you can ask Robert the question yourself. Okay, so we'll start going through some of these questions. Robert, what caused the decoupling of the economic indicators and the demand for wool?
Yes, I think it's. Remember that decoupling was mainly measuring 19 micron, and I think it's that. I think what that also tells us is that fine wool is cheaper than what it should be now. So it's a positive, because if it is cheaper compared to what its equivalent benchmarks have been, then that's a positive. And once again, you sort of go through all these different indicators and look them up, and you end up with a final slide that says there's mixed signals. But I guess that's the case. But we're trying to weigh them all up at once, and that's a very positive one, because if the Northern Hemisphere industrial activity is strong, it's because they're seeing consumer confidence, and in order to meet that consumer confidence, they're going to bid for raw materials. So the uncoupling, we think, has just been a factor of the poor or the weak fine wool price.
Okay, thank you. Next question is, what are the deciles like in US dollar terms?
They're very similar. Very similar. It's a good question. We used to put those up, and then we thought, oh, we're putting too many deciles up. We do have that information here, and I'm happy to. I'm just not able to grab it at my fingertips at the moment while we're doing the presentation, but we do have that information. I'd be happy to forward that to anybody, and look, if just on that, if anybody would like any of the charts that they've seen or any more information they thought we might have, please give us a call. We're only too happy to share that. But the deciles in, I know the last time we looked at it, the deciles in US cents per kilogram terms were at a higher level than the Aussie cents per kilogram. And that makes sense if you think about the fact that the currency had gone up and the market price at the same time.
Okay. Next question. We're being told consumers are wanting more natural, renewable products grown in an environmentally sustainable manner. Surely wool fits that perfectly. Why is it not walking out the door? Have you got an opinion or thoughts about that one?
Well, I've got an opinion. I'm not sure that we are experts in that area, but I agree 100%. And I think the opportunity for the future is to market it with that message. And why it hasn't happened in the past, I don't know, because it's an obvious one. And you know, we can always find reasons why it mightn't be quite as consumer friendly as pristine as we like because of the way it's processed, etc. But if you have a look at its competitors, it's very, very good. And you know, love him or whatever, you know, Prince Charles is right onto it. And AWI is starting to pick up on message as well. So I think, given that we're now a niche market, we're quite small in terms of world fibre. I think compared to 20 years ago, we were at almost 4% of the world fibre, apparel fibre market. We're now 1.8%. Going down those paths of target marketing and niche marketing and tapping into people's feelings, and that is the way to go. But the answer as to why it's not happening, I don't know.
We've got a few more questions coming through, but if anyone else has got another question, please type them into the question box and we'll get it answered. So, what are the wool production figures from major competing countries such as New Zealand, South Africa?
Yes, they're very similar. I don't have them in front of me, but they're very similar patterns to what we've seen here. Interestingly, the last figures I saw about New Zealand, which obviously is prime lamb business, but I think it was 10 years ago, the dairy industry in New Zealand was an $8 billion industry, and the lamb industry was a $9 billion lamb industry. Last year, dairy was 19 billion and lamb was 8 billion. So they're struggling for sheep numbers. Their numbers are going down, and it's affecting their lamb supply, and obviously it's affecting wool supply as well. So the worldwide fall in sheep numbers is worldwide. It's very similar to Australia. The biggest sheep flock in the world, of course, is in China, but you know, most of that wool doesn't get to market. But that's where most of the sheep are these days.
So a few more questions. Some of these are ones you may or may not be able to answer, reasonably broad. When are the current differentials between microns going to return to normal levels?
Yes, I think we're probably seeing the beginning of that. I know it's a very early call. It'll take some time because the differentials I think have got to come from fine wool going up, not medium wool coming down. That's my gut feeling, because of the very short supply of medium wool. So I think we're seeing the start of it, and it's going to mean that I just saw on today's report, you know, fine wool in Sydney up 30 cents, you know, 17 microns for selected types, and, you know, very positive report. I think we may be seeing the start of it, and it'll coincide with, funnily enough, it'll coincide with the seasons returning to more normality. And anybody who's been following Andrew Wood's reports, which he publishes with us and others, he's been monitoring closely the rainfall in areas and making connection with supply of fine wool. And so we need to watch closely where the season breaks and has good seasons, and then 6 to 8 months down the track, you know, the microns tend, those super fine hunger wools tend to go out of the market to some degree. But I think probably if you're holding fine wool and you're looking for a premium that's reasonable, so maybe, you know, a 250, 300 cent premium of 18 over 21s, then it's probably going to be closer to next June than Christmas time.
And following on from the last question, your thoughts on the return to more normal micron differentials, are they a good pointer to an improving wool market?
Well, we always said that, Alex. We always said that, you know, strong fine wool was, you know, the symptom of a strong market. That's been turned on its ear because we've never had a longer period of stronger medium wool prices. I think, I mean, we've got to remember that the whole market changed, the whole wool industry changed when, you know, the really strong processing fields that have been there forever, Italy and France and others who specialise in that fine wool, really struggled to compete, and the industry moved to China, and China was brought up on medium and strong wool. So it's been a slow process for that to sort of balance out a bit. But look, I think it will happen. One of the things which worries me to some degree, probably since I've been in the job too long, is that you think, you know, nothing that's happened in the past, or everything that's happened in the past has probably got possibility happening in the future. So I think we'll see a swing back where fine wool will be attractive. One of the things to remember, though, if you're a fine wool producer, if you have a look back over time, and the premiums, when you got good premiums for fine wool over medium wool, they were quite short-lived, and that's just a fact of life. They rally quickly, and they seem to come off quickly. So when we do see some fine wool rallies, you know, we'd be really encouraging people to try and lock away as soon as you can of that. But in terms of, I had someone call me the other day, just as in conversation, you know, how would I go buying a bit of wool for my super fund? I said, if I was going to buy wool today, it would be fine wool from a super fund. That's not financial advice, Alex, by the way.
Thank you for that. There's a couple of questions around where can they find information. First one is, where can I get decile figures for 16 and 17 micron wool?
Yep. Well, the first thing it would be to call us. All you need to provide decile figures is a historical record of the indicator, and we've got all those historical records, as have others. We publish them from time to time on the Mecardo website. We don't do it every week because we just think that's that's not the way to look at deciles. You don't want to look at 1 week and say, oh, they moved 1% or whatever. It's more looking at the big picture. We'd be more than happy to, as I said, if there's any information regarding to the wool industry and regarding to prices, probably either Andrew Woods or ourselves are the ones who have got it these days, and we'd be more than happy to share it.
And similarly, chasing historical price figures in percentiles for various microns. Similarly, you guys would have that information, or someone else.
Yep. Yeah, the same answer, Alex. Yep.
Okay. If you had a choice, what weighting would you give to increasing fleece weight versus decreasing fibre diameter?
Well, I should go back to an article we wrote, or Andrew Woods wrote, I think, 4 weeks ago, and I guess it depends on your view of how sustainable the fine wool premiums will be, medium wools. I guess my well, if you go back to 2000, there was a very strong case put by people travelling around Australia saying that you had to head towards 15 and 16 microns. The stubborn farmers who had 22 to 23 micron wool cutting big fleece weights were the ones who made all the money in the last 10 years. So my feeling is that we're lucky these days because we have fine wool sheep that are far more than they were in the past. And the reason I think that's important is because it's going to be vitally important that in the future a merino sheep has a reasonable carcass and produces a lamb every year, at least a lamb, because the price and outlook for meat in this world is very good. So I love my fine wool, and I know a lot of people do. So I like having fine wool, but I still wouldn't compromise a sheep that is an all-round sheep that can reproduce itself and turn off some good mutton or good lamb. So my answer would be I probably wouldn't. We've got to remember the clip average in Australia now is about 19 microns, whereas 25 years ago the clip average was probably closer to 23 microns. So the whole clip's gone finer, and the sheep are better. So I'd be looking for probably around the 19 micron, but I'd be pushing to make sure I had as much fleece weight as I can, because that'll mean I've got a big, robust sheep. So that's a bit of sheep advice from a market person, so I don't know how much weight that'll carry, Alex.
Why are current discounts for VM and staple strength so low relatively?
Yeah, the VM one's an interesting one. It has a seasonal pattern, and I'm trying to recall now that Andrew Woods wrote about it only a couple of weeks ago. The discounts for the second one was for staple strength, wasn't it?
Correct, yes.
Yeah. Staple strength or low staple strength discounts and discounts for short wool are closely related. And if you think about it, it's probably the way the wool's processed. You end up with a wool that's suitable to the wool industry. So that demand for that woolen industry or the knitwear industry has been very good. If cotton, and it competes probably in the same market as cotton, and cotton did have a good run, and in recent times it's tipped over. But if cotton happens to tank in the next 6 or 8 months, then there are some concerns for those discounts. They may get stronger, may blow out again. But that would mean that the demand in the knitwear section has started to drop away, or it's not competing well against cotton in the same area.
Okay, we've got about 5 or 6 minutes to go, so I'll just give you a couple more questions, and I'll hand back to Noel. This question may be more of a comment from you or a thought. At the peak of Australian wool production In 1990 we were producing 1100 million kgs, and now we're doing 340 million kgs of wool, but still receiving the same price, or the price languishes. Why, when are we producing so little wool, are we not being paid more for it?
Yeah, look, it's a frustrating situation, and I fully sympathise with the person who's asking the question. One thing to remember, though, is that the world's not sitting there waiting for our bar of wool. So if none of our wool turned up in the market, there'd be very few people at retail end who would realise or notice. So what's happened, as our production has fallen from 11 million down to 3 million, which is the figures you just quoted, so has the processing capacity fallen in line. There's not woolen mills sitting out there idle waiting for the wool clip to grow in Australia. And we're different to food because you know, if suddenly there's no lamb coming out of Australia, it has to be substituted by some other meat, pretty much. Whereas with wool, we have so much, and given that we're less than 2% of the world fibre market now, we have so little impact with our supply. That said, that also creates the opportunity, though. The opportunity is to be a niche producer. You know, the world doesn't need silk either. The world doesn't need Rolls Royces, but those people sell them for premiums, and it takes a special type of marketing. We probably also suffer a little bit, Alex, from the fact that we're sitting down here in the Southern Hemisphere, and our ultimate customers, the retail customers, are up in the Northern Hemisphere, and we have very little contact with them, and that's just a fact of life. That, you know, the industry, you know, is set up that way, that it moves slow. The wool moves slowly through the pipeline, and it has a long way to go. So we can't get out there and actively promote it ourselves. And anybody who's had any delegations come out here or met people overseas, you know, they're always fascinated in what we do. But in terms of turning it into a marketing opportunity, it's extraordinarily difficult because of our geographics.
Very good. Thank you for that, Robert. Much appreciated. There is still some more questions. I'll wrap it up now and hand it back to Noel so we can finish on time. But I'd encourage people to contact Robert directly. You will have received an email with his details already. Otherwise, visit the Mecardo website, and I'm sure Robert will be able to answer the questions that are left. So thanks very much, Robert, and thanks for all the questions from the attendees. And I'll hand it back to Noel Dempsey.
Okay, thanks very much, Alex. I noticed that some people joined the webinar late. If they want to listen to the full webinar, I'd repeat that it has been recorded and is available on the Leading website. There is an evaluation link in the question box. I'd encourage all the participants to complete the evaluation. It's very important to us, and it only will take a couple of minutes of your time. It allows Leading Sheep to deliver the best possible and most relevant products. The information you provide is valued and